Good afternoon. This is the market update for Thursday, June 13th. Big update today on Wall Street. And after the close, I guess we found out the real reason why. We actually were up on the day, but big surge late in the day, and supposedly after hours, there was a Wall Street Journal article. One of the Fed governors, Hilsenrat, I believe is his name, came out and pretty much said, even when the Fed does start to taper, they're not going to immediately withdraw all QE, that there will still be money every month, and interest rates will stay low. And that's the reason why we saw that 70, 80-point move in the last 40 minutes of the day, and why a Fed governor is just talking to the Wall Street Journal, that's a paid magazine, and not to everyone else, because, stuff gets leaked, is beyond me. But there you go. That's how it goes. And a 3-day sell-off almost reversed course in 3 hours. We had what's been going on over the last couple of days. That nonsense in Japan continued to weigh on the market. We had the Nikkei down almost 800 points last night. Just crazy. And a lot of scared traders out there in pre-market in the U.S., in the futures and whatnot. But we did not implode. We dropped a little bit, and as I mentioned in the chat room late yesterday, I expected the market to actually be up today. That when we saw the kind of action we saw yesterday in the Dow, and if we flip over to the 15-minute chart, that action we saw yesterday in the Dow, of late, especially when it happens 2 days in a row, the next day tends to be up. Doesn't no matter what the reason is, they will find an excuse, and up we will go. And actually, right after the open, I said that today felt like it was going to be a big up day, and sure enough, boom went the market. Everything else pretty muted, but that is typical when you see the robots chase and try to cover and get squeezed out of positions on the large caps. And then we see traders start to grow some balls, and over the next couple of days we'll see some action. The Fed meeting is next week, and just looking, if we go back and look at the Dow transportation charts, looks great here, right at a breakout of the triangle. RSI looks great. The sell-off over the last 3 days, as you can see, on much lower than average volume. We're about to get a positive MACD cross, possibly tomorrow, more likely Monday, and stochastics ready to go in an uptrend. The Dow daily chart, exact same triangle breakout here, just slightly above, around 15,200, 225, and again, like the other indices, all the indicators are a go, and another bounce off the 50-day moving average. The shorts had the ability, or if they had the strength to break us under the 50-day moving average, and that did not help. But anyway, back to Japan. What's going on in Japan is everyone has expected the Bank of Japan to continue to splurge money, and since November, Nikkei up big. And over the last week or two, some of the Bank of Japan, I guess you would call them governors, like the Fed governors, have come out and given contradictory statements. And the market does not like fear, and down we go. I mean, I keep trying to tell people, they do not realize how key the strength of the Fed and their resolve has been over the last few years. We've got the idiots in Europe and the clowns in Japan as an example of how you can blow stimulus. And next week, I believe we'll see a pretty strong statement from the Fed saying, we're not done yet, guys. And it'll be off to the races in the market. And let's check out the TLT. This is the Treasury Bond Fund, and you've heard nothing but chatter about interest rates are going to sky high, blah, blah, blah. About to break out here. About to get a positive MACD cross. Stochastics in the basement. Check out this sweet bullish falling wedge. Very close to a nice big reversal. And one thing I've learned over the last few years, whatever they say on TV, the opposite tends to happen. Over the last couple of days, everyone rushed to the short/scared side of the boat, and look what happened today. 200-point rally. Now, I put a new link on the research area of the site, and this is a really neat little fear and greed index that they have on CNN Money. And yesterday, this hit 22. A month ago, when we were at the highs, it was 86. Extreme fear in the market, and lo and behold today, 200-point rally. This is why when everyone is doing one thing and the business media is saying another, you tend to do the opposite. As you can see here, the last couple of times we've gotten extreme low levels like this, we've seen a big bounce back in the overall markets. And if we go back and look at another indicator that was very useful for us over the last few days, put call index, check that out. Back up to 120 again. Remember what happened last week when we got above 120, when we had that 120 reading? 200-point rally the next day. So a couple of indicators to really keep an eye on and ignore the noise you hear on TV. When it's time to panic and time to run for the exits, I'll tell us it's time to panic and run for the exits. Until then, we're going to keep playing the momentum that's out there and, keep playing the stocks that are moving. Quick mention on the Russell, almost identical to the other charts. All these big indices are right at triangle breakouts. Tomorrow and Monday are going to be key. We get a breakthrough on these levels, and there's probably going to be an avalanche of short covering and another avalanche of all those guys who are sitting on the sidelines saying, oh, this is the dip I'm going to buy, going, crap, this is the fifth dip I've missed in the last 2 months. To hell with it. I'm going to start buying. And when you start to see that, the mania we've seen on some of the small cap stocks over the last couple of weeks is nothing to compare to the mania I believe that will come in the coming weeks. Anyway, let's jump into some stock plays. DCTH, very nice movement on this one over the last couple of days for us. Had a big dip yesterday. We picked some shares up at 42 cents, flew all the way back today, dipped again, and you're starting to see the mainstream media talk about this one, close right at the 20-day exponential. Next ad on this one is a break of 50, and the upside on a break of 50 is a gap fill up to that 70 to 80 cent area. So very, very nice upside. I would be a buyer on any dips, 42, 43 cents, or on a 50-cent break is how we're looking to play this. But the chart looks great. RSI upticking, stochastics up through 50. This could be a very, very nice play for us over the next few days. And it reminds me a lot of the other stock that we have done very, very well on over the last month, PLUG. You recall no one was playing this stock back in May when we jumped in down there in the 20s. And since then, it's gone up 150%. Flag breakout, flag breakout, flag breakout. Got a nice little pop. Last 2 days we've pulled back. Hopefully we'll see this one coil here around the mid-40s for a couple of days before we get another upside break. Quick update on Mad Cats. Kind of disappointed that we're not seeing more or hearing more buzz on Mad Cats. But again, this is going to be a stair-stepper play over the next few months into the Xmas season. So, it's back down to the support line. Came down on pretty low volume. The breakout is 50, 52 cents is the key level for us to keep an eye on near term. Not a whole lot of action today. A lot of it was intraday scalping. We played a couple of stocks. For every one that worked, one failed. That's, kind of typical in a choppy market like this. But the big close we saw, we should see some very nice action over the next couple of days. Oil prices are actually starting to tick up, so we're going to need to keep an eye on the oil stocks. And interestingly enough, one of the pop scam plays today, DSX, shipper stock, very nice mover. Dry ships, DRYS. Let's pull that chart up as well, DRYS. Nice little bounce on this one too, and as you can see, DSX. Nice little bounce in this one, so might be time to put the shippers on watch again for the next couple of days. So that's it for the video. I'm optimistic into the next week on stocks and on the market in general. I think we're going to see some very, very nice opportunities over the next few days. Everyone got scared, sold out, went short, got bent over, up we went. Rinse, repeat, don't fight the Fed. This market is 1995 again. Just look at what happened in 1995. Compare it to this year. You'll see what I'm talking about. So have a great night. See you guys in the chat room tomorrow. Bye.